What's up, crypto crew? Get ready for a blast of the hottest news hitting the digital asset space. We're diving headfirst into a market that refuses to slow down, bringing you the updates you absolutely cannot afford to miss. First up, we're exploring a fascinating comparison that could reshape how we view value, pitting a digital titan against a traditional store of wealth in a way that highlights potential opportunities you might have overlooked. Next, we're heading into the heart of mining operations, where a major player has just navigated a significant legal challenge, settling a hefty lawsuit that's already causing ripples. This development comes as their market presence is experiencing a remarkable surge, proving that even in the face of adversity, strategic moves can lead to dramatic comebacks. Then, we're shifting gears to the cutting edge of technology with a look at revolutionary mining hardware. Imagine machines that redefine efficiency and power, built for the future of large-scale operations. This is about pushing the boundaries of what's possible in securing the network and maximizing output. And finally, we're witnessing a surprising turn in the regulatory landscape, where a quiet shift could signal a major endorsement for certain digital assets, potentially leaving others in the dust. This is Bitcoin Bulletin, and you're about to get the inside scoop. Don't blink, because the game is changing, and we've got it all right here, right now. Make sure you're subscribed and the notification bell is on. Digital gold versus digital pioneer, a new valuation perspective. Prepare to have your perspective on value fundamentally challenged as we delve into a striking analysis comparing Bitcoin's potential against that of gold, but with a twist. This isn't your typical comparison. We're looking at a volatility-adjusted buy opportunity that suggests Bitcoin might be significantly undervalued when viewed through a more sophisticated financial lens. For years, gold has been the go-to safe haven, the ultimate store of value, a tangible asset that has weathered economic storms for centuries. Its stability, its historical precedence, and its physical nature have cemented its position in portfolios worldwide. However, in the digital age, a new contender has emerged, one that offers a different kind of security and a different kind of potential return. This new analysis takes a deep dive into the historical price action of both Bitcoin and gold, meticulously adjusting for volatility. The findings are compelling. When you account for the inherent fluctuations in Bitcoin's price, its potential as a long-term investment, particularly as a buy opportunity, appears remarkably strong. Traditional metrics might shy away from Bitcoin due to its price swings, often labeling it as too risky. But this adjusted view suggests that these very swings, when understood and managed, present a unique entry point. It posits that Bitcoin, despite its reputation for volatility, offers a superior risk-adjusted return profile compared to gold in certain scenarios. This could fundamentally alter how institutional investors and everyday individuals alike perceive Bitcoin's role in a diversified portfolio. It's not just about owning a digital asset. It's about understanding its evolving place in the global financial ecosystem and recognizing when the market presents an exceptional chance to acquire it at a favorable valuation. This perspective challenges the long-held narrative that gold reigns supreme in the realm of value preservation and growth, opening the door for a reevaluation of where true opportunity lies in today's rapidly evolving financial landscape. The market is buzzing with discussions about this adjusted valuation, with many analysts pointing to this as a critical moment for understanding Bitcoin's true potential beyond its speculative appeal. It's a conversation that could redefine investment strategies for years to come. But before we get too comfortable with these new valuation models, we're heading into the high-stakes world of crypto mining, where a major company just made a significant legal settlement. Stay with us. Mining giant settles $30 million lawsuit amidst market surge. In a development that underscores the high-stakes nature of the cryptocurrency mining industry, Bitcoin miner Iren has reached a significant settlement, agreeing to pay $20 million USD, approximately $30.6 million AUD, to a New York-based lender. This resolution brings an end to a protracted legal battle that spanned across Australian and Canadian courts, stemming from defaulted debts incurred during a previous market downturn. The company, formerly known as Iren Energy, has seen its fortunes dramatically improve, with its market value soaring to an impressive $5.3 billion, mirroring the broader surge in Bitcoin's price to record highs. This legal victory, or rather, its successful resolution, comes at a critical juncture for Iren, allowing it to move forward unburdened by past financial obligations while capitalizing on the current bullish market sentiment. The initial default occurred in 2022 when cryptocurrency prices experienced a sharp decline, leading to a significant drop in Iren's share price and its inability to meet its loan obligations. The $103 million loan from specialist infrastructure lender NYDIG had become a major overhang. However, the subsequent recovery and new all-time highs for Bitcoin have revitalized the company's prospects. The settlement amount, while substantial, represents a fraction of the company's current market capitalization and is a strategic move to ensure operational stability and future growth. The Nasdaq-listed miner, founded by former Macquarie executives, has clearly demonstrated resilience and an ability to adapt to market volatility. Its operational capacity and expansion plans are now set to proceed with greater certainty, bolstered by the positive market environment and the resolution of its legal entanglements. This settlement is not just a financial transaction. It's a testament to the company's strategic repositioning and its successful navigation of a challenging period. The market's reaction has been overwhelmingly positive, with the share price reflecting renewed investor confidence in Iren's management and future outlook. The ability to secure and manage debt, especially in a volatile industry, is a key indicator of financial health and operational competence, and Iren's recent actions speak volumes. This significant legal resolution is already being discussed widely, with investors and analysts keen to see how Iren leverages this newfound stability to further solidify its position in the competitive mining landscape. Now, let's pivot from financial maneuvers to the very hardware that powers the network, because a new mining innovation is set to redefine efficiency. Stick around. Revolutionary mining hardware promises unprecedented efficiency. Get ready for a glimpse into the future of Bitcoin mining with the unveiling of the AxionMiner 800THS, a device that's being hailed as the most powerful and efficient Bitcoin miner of 2025. This cutting-edge machine boasts an astonishing hash rate of 800 terahashes per second, THS, while consuming a remarkably low 12,000 watts, all thanks to its integration of advanced 3nm chips and industrial-grade cooling systems. Designed with large-scale operations in mind, the AxionMiner 800THS is engineered for stable, high-performance output, setting a new benchmark for the industry. Its physical dimensions are compact at 650 x 430 x 180, and it weighs 30,000 grams, making it manageable for serious mining farms. The miner operates using the SHA-256 algorithm, the very foundation of Bitcoin's security, and is versatile enough to support other cryptocurrencies like Bitcoin Cash, BCH, eCash, XCC, and Peercoin, PPC. Set to ship in October 2025, with a planned August 2025 launch, this device is built to withstand demanding environments, operating efficiently within a temperature range of 5 to 45 degrees Celsius and humidity levels from 5 to 95%. Its noise level is rated at 80 dB, typical for industrial-grade equipment, and it requires a standard 200-240V AC power supply. Connectivity is handled via Ethernet, ensuring seamless integration into existing networks. What truly sets the AxionMiner 800THS apart is its accompanying control panel. This sophisticated system offers centralized management for an unlimited number of miners, accessible across all major platforms, Windows, macOS, and Linux. Users can monitor hash rate, power consumption, and efficiency in real time through live graphs, providing unparalleled transparency and control. The control panel also emphasizes security, incorporating advanced encryption and safety protocols to ensure the longevity and stability of mining operations. This user-friendly interface simplifies setup, allowing miners to deploy and manage their operations with ease, whether they are individual enthusiasts or large enterprises. AxionMiner's commitment to innovation is evident, addressing the escalating demand for high performance energy-efficient solutions that can maximize productivity while minimizing operational costs. This launch signifies a major advancement, offering a potent combination of raw power, energy efficiency, and intelligent management. The anticipation for this device is palpable within the mining community, with many seeing it as a pivotal development for maximizing returns and maintaining competitiveness in the evolving mining landscape. Finally, we're turning our attention to the geopolitical stage, where regulatory winds are shifting in a way that could dramatically favor Bitcoin over state-controlled digital currencies. You won't want to miss this final update. Regulators quietly favor Bitcoin as central bank digital currencies face uncertainty. In a significant development that could reshape the future of digital finance, a subtle but powerful shift is occurring in regulatory attitudes, with authorities increasingly appearing to back Bitcoin and private stablecoins while central bank digital currencies, CBDCs, seem to be losing momentum. Changpeng CZ Zhao, the former CEO of Binance, has been a vocal proponent, asserting that Bitcoin is strategically positioned to become a global reserve currency. He contrasts this with what he describes as outdated CBDC models, championing the practical adoption and utility of stablecoins instead. This perspective is gaining traction as policy frameworks evolve globally, suggesting a preference for decentralized or privately backed digital assets over state-controlled initiatives. This trend is clearly reflected in recent legislative actions. In the United States, the passage of the Genius Act in 2025 is seen as a legislative endorsement for stablecoin adoption, signaling a move away from the pursuit of a U.S. CBDC. Similarly, Hong Kong has enacted its stablecoin ordinance, further cementing its status as a forward-thinking hub for digital assets and providing a clear regulatory pathway for private stablecoins. These moves indicate a broader governmental recognition of the benefits offered by private sector innovation in the digital asset space, prioritizing frameworks that foster growth and adoption rather than direct state control. Bitcoin's integration into the mainstream financial system is accelerating, evidenced by strong institutional demand. The launch of spot Bitcoin ETFs in Hong Kong in 2024 has been a key catalyst, attracting significant capital inflows and demonstrating regulatory flexibility. These ETFs have collectively drawn in substantial assets, with BlackRock's IBIT and ARK Invest's ARKB leading the charge, recording net inflows of $179 million recently. This institutional embrace, coupled with increasing regulatory clarity, bolsters Bitcoin's narrative as a robust store of value and a potential global reserve currency. The Asia-Pacific region, in particular, is at the forefront of this adoption wave, with jurisdictions like the UAE and Singapore actively attracting blockchain innovation through favorable tax policies, such as zero capital gains tax on cryptocurrency transactions. These proactive measures create an environment conducive to growth, encouraging both retail and institutional participation and solidifying Bitcoin's global expansion. Furthermore, Bitcoin's utility in cross-border transactions and remittances is growing, especially in regions grappling with unstable fiat currencies. It's increasingly being adopted as a hedge against inflation and a facilitator of seamless international payments. This growing acceptance, driven by both technological advancements and evolving regulatory landscapes, strengthens the case for Bitcoin's eventual rise as a global reserve currency, offering a stable and accessible alternative in an increasingly digital world. The market is keenly observing these regulatory shifts, with many believing this signals a pivotal moment where private digital assets gain a significant advantage over government-issued digital currencies. That wraps up our major updates, but don't go anywhere. We've got a super fast recap and a call to action coming right up. And that's a wrap on today's essential updates. We saw Bitcoin potentially undervalued against gold with a volatility-adjusted lens, a major mining company settle a significant lawsuit as its stock soars, the launch of incredibly efficient new mining hardware, and a surprising regulatory lean towards Bitcoin over CBDCs. Don't miss out on any of the action, smash that like button, subscribe for more critical insights, Ring that notification bell so you're always in the loop, drop a comment with your thoughts, and follow us on all social platforms for daily updates. We'll see you in the next one.